Master Plan 3, and specifically about Tesla's battery business. The in-house battery is seen as a potential game changer in the EV industry at large, but of course there's massive challenges in scaling that 4680 cell. Do you think that Musk ultimately pulls it off? And if he does, what does that mean for Tesla? Is that being priced into your target at the moment?
Well, if you don't mind, let me flip the question back to you. Can you think of any other tech firm or any firm in the world that has the capability and the scale to re-architect and industrialize a supply chain which is currently broken? I mean, the current battery supply chain is not secure. It relies on materials that are not sustainable in parts of the world that are contested and not secure, to say the least. If it's not Elon, who else is going to do it?
So companies usually put splits in place when they're really confident that things are going to go very, very well. I don't think we have a miss coming anytime soon. I think this is a company that will continue to beat on deliveries, continue to do a spectacular job.
So Craig, with Tesla trading over $1,000 a share right now, why the $250 price target? Why do you hang on to that?
In this video, I definitely won't be making any more comments about Will Smith being a pathetic, approval-seeking, beta cuck, and not having nor deserving the respect of his wife. After all, this video is about Tesla, not the most pathetic man on the planet. So, in this video, Tesla bull Adam Jonas explains why Tesla is untouchable, and Tesla bear, aka Closet Bull, Craig Irwin, hypes up the company saying Tesla will continue to crush Wall Street expectations quarter after quarter, yet still believes Tesla stock is worth just $250 per share. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. Tesla stock continuing higher today, closing just below $1,100 per share. Just to put things in perspective, over the last month, Tesla stock up almost 30%, but since bottoming out its lowest closing price in the last month, Tesla stock actually rebounding well over 40%. That said, year to date, Tesla stock's still down. Just between you and I have a funny feeling it won't be too long before the year to date on Tesla is actually positive. Of course, I could be wrong. In the span of just the last couple of weeks, Tesla stock has rebounded from around $700 to about $1,100 per share. If only we could have seen this coming. We might have been loading up on Tesla stock in the 700s and the 800s and the 900s. Oh wait, that's what I was doing. What were you doing? And now over to our favorite closet Tesla bull, Craig Irwin, who despite his $250 per share price target for Tesla stock, meaning a collapse of about 75% from where we are today, has nothing, and I mean nothing, but extremely positive things to say about the company, their continued execution, and their continued crushing of Wall Street expectations. You know, Craig, I wish you were just comfortable being yourself, just coming out of the closet and telling everybody you're actually a big Tesla bull. We won't judge you. Besides, we already know.
Craig, it's good to see you again. On the split, what do we think the motivation is? Is it about changing the investor base? Is it about some sort of index inclusion? Something else?
So companies usually put splits in place when they're really confident that things are going to go very, very well.
Craig has hit the nail on the head here. This is an extremely, and I mean extremely bullish signal from Tesla that management is very confident of their continued execution, dominance, and further extension of their unassailable lead.
The last stock split was a tremendous catalyst for Tesla. If we look forward for 23, 24, 25, new models like the mini car, you have Germany ramping, you have so many initiatives like India that they should really give us some pretty good visibility on. Hopefully this year. It's been too long, but these are big levers the company can pull and will pull.
I'm sure there's a joke about pulling large levers, but I'm not going to go there.
I think there'll be positives in the valuation. That's why I keep the neutral despite being bearish.
So let me get this straight. Craig Irwin has a $250 price target on Tesla stock. Tesla stock today about $1,100 per share. He's a bear, yet he has a neutral rating. In other words, he's not advising people to sell the stock or short the stock or to buy it. In addition, he just said that a lot of strong catalysts to further increase Tesla's valuation. Craig Irwin believes there's a lot of things in the medium term, in the future, that are going to drive Tesla's valuation higher, yet he still has a $250 price target.
Right. Yeah, 250's rather bearish. On production, Giga Berlin, we've had some commentary in recent days that's going to help at least Q1 momentum on delivery. But now we have Shanghai to worry about. Which is going to win out?
You know, I think there's puts and takes. It's very, very hard to know exactly at this point. If people want to know, they should look to the registrations data from EV volumes. Victor Earl and his team out of Sweden do a phenomenal job there. Globally, we're going to have to wait for that data to really know. Reality is, you know, I don't think we have a miss coming anytime soon. I think this is a company that will continue to beat on deliveries, continue to do a spectacular job.
Well, absolutely nothing to see here. It's not like the Tesla bear just used the word spectacular to describe Tesla, nor did he just suggest that he's confident that Tesla will continue to crush Wall Street expectations for quarters to come.
You know, the question now in my mind is, you know, 1.5 million really the number for this year. Did we beat that? Quite possibly we do.
No. Most definitely they do. Come back in early 2023, let's see what happens. I'm extremely confident that Tesla will far exceed 1.5 million units produced and delivered for the full year of 2022, even if an asteroid takes out one of their factories.
So Shanghai is a speed bump, but it's not something that we see as really a major impediment. If anything, there'll be pent-up demand in China for those vehicles.
So, Craig, with Tesla trading over $1,000 a share right now, why the $250 price target? Why do you hang on to that?
Good question, Morgan. I can't wait to hear how Craig Irwin explains why Tesla's valuation is insane, despite the fact that they're slaying it, they have an unassailable lead, they're massively expanding production, and they're going to absolutely destroy Wall Street expectations quarter after quarter after quarter. Over to you, Craig.
So you look at the largest automotive company globally.
No, you don't, Craig. No, we're not doing this again. Oh, Tesla's valuation compared to this car company is so high.
Toyota, right? They have about a $300 billion valuation. They sold 9 million cars last year.
Here's a very important question that Craig and most of the Tesla bears don't seem to be asking. How many vehicles will Toyota sell in 2030? Is it going to be more than 9 million? Is it going to be more than 900,000? Are they even going to be in business at the end of the decade? The answer to all three of these questions is most likely no. There is so much wrong with this line of reasoning, using the term extremely loosely there. Let's talk about a few of the reasons why this is absolutely absurd. Toyota and Tesla are not the same thing. They're not even close to the same thing. Toyota is a traditional automotive manufacturer. They make cars. They make internal combustion engine vehicles. They're also so dumb they think hydrogen might be a viable option in the future for vehicles, and they're not sure if electric vehicles are the future. Their words, not mine. Besides the fact that Toyota are most likely to be out of business by the end of this decade, or in the best case scenario, maybe a fraction, maybe 10% of what they formerly were. In other words, Toyota equals Titanic, and Tesla the polar opposite, pioneering, creating, going after, and dominating an enormous multi-trillion-dollar opportunity, and have an unassailable lead in doing so. Another reason that Toyota and Tesla are not even close to comparable is they're totally different companies. Tesla is a software, an engineering, a technology company. They're an AI company. They're doing things that no automotive company on the planet is doing. Been over this a trillion times, I'm not even going to bother explaining in more detail. So comparing Tesla's valuation with an irrelevant, disparate company makes no sense. I find it hard to understand how any stock analysts out there today are making this error of judgment and directly comparing Tesla with Toyota or another legacy automotive manufacturer, and thinking that not only do they currently offer the exact same thing, they are the same thing, they're equivalent, they're identical, there's no differences whatsoever, but in the future, the same will be true. This is like, and by the way, I'm sure I'm going to offend a lot of people, but deal with it, facts are facts. This is like a morbidly obese, negative, pessimistic, envious, jealous, low-value human being, a 1 out of 10, and I'm not talking about looks, I'm just talking about a garbage human being, no personal responsibility, they don't have a growth mindset, the kind of person that even if you were paid $1 billion, you wouldn't want to date. This is like the 1 out of 10 woman on Tinder, in her profile, believing that she offers the same value, say, as Craig Irwin thinks Toyota does, and saying, I'm looking for something serious, I'm looking for somebody who recognizes that I'm a princess and will treat me like one, no hookups, don't even bother matching with me unless you're at least 6 foot tall. A multi-millionaire who makes hundreds of thousands of dollars per year, is extremely fit, healthy, happy, wealthy, wise, charming, tall, dark, handsome, has options with other women, and recognizes my value. P.S. I also have 6 children from 6 different fathers. But you'll be a big man and step up and be their daddy. And I also might need an allowance for buying gifts. Craig Irwin is showing this exact same complete inability to accurately gauge the value of something.
There is nothing that Tesla has that Toyota doesn't as far as technology.
This should be a career-ending comment. But of course, When you're a stock analyst and you're completely fucking wrong, apparently that doesn't matter. I mean, seriously, Craig, just get the fuck out of here, dude. He just said... You know, let's continue this analogy. This is like the 1 out of 10 who's struggling to catch that top 0.0001% guy, talking to her friends who are consoling her about her failures so far at attracting Prince Charming. She says to her friends, I don't understand it. I'm a catch. Every guy would be lucky to be with me. I don't understand. Why do these guys want these women who aren't morbidly obese, who aren't too old to healthily have children, who don't have a bad attitude, who aren't dishonest, who are fun, feminine, nurturing, kind, a joy to be around, intelligent, compassionate? I'm just as good as these girls. There's no difference between me and them. Why aren't any guys dating me?
There is nothing that Tesla has that Toyota doesn't as far as technology. Toyota has a much closer relationship historically to Panasonic than Tesla. Tesla's got $1 trillion valuation. They sold 900,000 cars. You know, okay, we should give them a very chunky premium for leadership in EVs, right? Really creating the EV market. But I think 300 billion is probably closer to where this thing should be. 250, 300 billion, you know, not $1 trillion. Because by the end of 2025, there's going to be 500 EV models on the road.
This is another incredible example of brain damage in action. The number of electric vehicles that will supposedly exist in the future doesn't fucking matter. What matters instead is of those electric vehicles that actually do eventually make it to volume production, how many are compelling and represent such great value that customers will line up, kick down your door to buy one, and at the same time, of these vehicles that customers actually want and are actually buying, good luck with that, how many of these will the manufacturer be able to produce profitably? This is the question.
There's 60 new EV models coming this year. Many of them will be successful. Tesla's just done a spectacular job, and, you know, they should be rewarded for that. But a premium valuation would be, you know, a third of where the stock is now, or a quarter.
Yeah, I get that. And certainly in terms of absolute numbers of vehicles that are being sold and manufactured, I mean, Tesla's still a smaller player. That being said, there has been this emerging narrative that Tesla is kind of the maturing leading option when it comes to EVs specifically. You don't buy into that?
I completely buy into that. I think Tesla's a very exciting, interesting company. I just don't see them doing 20 million vehicles. I think there's going to be too much competitive pressure. And others that have moved fast and maybe not done the optimizing of their technology, Porsche's a great example. They should have had silicon carbide in their drivetrain. Will make those changes, and they will all be fully implemented by 2025.
Now, I could be wrong here, but if I follow what Craig is suggesting, it appears that his line of reasoning is Porsche today, way behind Tesla. They should have done other stuff that Tesla's done, but by 2025, they'll catch up to where Tesla is today. Now, I know sometimes thinking, you know, too hard, so don't. But if we do, I know it might hurt, but if we do actually think for a moment here, while Porsche is apparently catching up to Tesla in 3 years' time, over those 3 years, what is Tesla doing? Is it possible that they might actually be moving further ahead? So in 2025, when Porsche's where Tesla was, apparently in 2022, Tesla is once again multiple years ahead. It sure is. Doesn't occur to Craig.
Tesla's valuation is really a function of the scarcity of successful companies in the sector. You know, by the end of this year, I think we're going to start seeing a few more that are treated with fair to optimistic valuations. We've already seen a couple of those, and you know that's why I'm saying I think people are much better off in the small cap names right now.
Brilliant advice here from Craig. Why bother going to the finish line and pick the clear winner? No, instead, why don't you make an extremely high-risk bet on an unproven loser who so far today have done nothing but talk about how in the future they'll be very successful and profitable? Again, with the dating analogies, this is like a woman who decides, rather than picking a guy who's got his shit sorted out and ticks all of her boxes, because there's proof he does this, instead, no, she's going to take a massive bet on a guy who's 38 years old, still living in his mum's basement, and does a lot of talking about how in the future he's going to move out, he's going to be successful, he's very ambitious, he's very confident. Just you wait, I'll prove it. Time now to move on to some comments from Jonas of Morgan Stanley, who seems to be a little bit more intellectually consistent in his comments around Tesla.
Your overall point in your writings last few weeks has been Tesla's a must-own, but you continue to warn about dealers especially who you think are beginning to tamper with the consumer's ability to keep up with prices. How can both things be true?
Well, it's interesting when Elon Musk and Tesla went state by state to try to get the ability to go direct to consumer. At the time, a lot of folks, including a lot of dealers, thought Tesla, they're just, you know, a fly. They'll go away over time. You'll see. They didn't count on this being $1 trillion company. And one of the most deterministic tech firms in the world. So now we have a little problem where there's two classes of car companies that can go direct, where, Tesla and some of the new startups can stack retail and have a more frictionless experience, whereas the legacy folks are kind of prevented from doing so by 70-year-old dealer franchise laws. So, Carl, I wouldn't rule out this might have to go to the Supreme Court at some point to be able to harmonize this or have some kind of way to move forward, because one of the reasons why Tesla is such a profitable car company isn't because their cars themselves are so profitable, but because they capture that downstream pricing that it gets leaked to the dealers with the traditional model.
This is a fair point from Jonas about Tesla's profits, but I think he oversold things a little bit. Certainly the fact that Tesla doesn't sell their vehicles through dealer networks means there's a little bit less leakage, therefore some higher profits on their vehicles. But this isn't the primary reasons for the difference between the profitability of Tesla and legacy automotive manufacturers. Throughout every aspect of their business, Tesla has cut costs. They're extremely resourceful. All of these little compounding effects, saving a little bit here, a little bit here, a little bit here, adds up to enormous industry-leading profit margins.
Right. And do they give anything up in return in the way of service or convenience or just the accessibility of a dealer network?
Listen, first I want to acknowledge that dealers have the laws on their side, so they're just operating, in a legal way, in a way that's been constructed. The downside for Tesla going direct historically was they had to make those investments, the stores, the service centers, and particularly in the early days, and even now, there have been some problems. Tesla's electric cars tend to not have many things that break, but when they do, you might have to wait a while, schedule your appointment. That's where some of the flaws in the system have come out. But over time, Tesla has been able to work through that. And I think we could agree on this program, they have the capital and the capability to continue to address those issues. There's no going back in terms of a franchise.
He ain't wrong. Legacy automotive manufacturers made a deal with the devil in terms of the dealerships. There's no way out now. They're forever doomed. They're going to be losing some of their profits to the dealership model. They can't revert. They can't back out of this. There's no prenup. They're fucked. They can't compete with Tesla on cost. They'll never be able to because they have additional cost burdens that Tesla doesn't need to deal with.
Yeah, so I wonder, Adam, you said that this could go all the way to the Supreme Court as sort of the legacy players look at this model and all of the benefits that you just laid out. Do you think that that's something we're going to hear more about? How does that happen? When does it happen?
It's a very tricky situation. I think the traditional car companies are trying to experiment and to look at tweaks to the existing franchise contracts while still, of course, obeying the laws, and to try to find ways to have a new contract that the dealers could opt into as they roll out new digital models, connected cars, electric cars. But in our opinion at Morgan Stanley, we think that the legacy car companies like a Ford and GM, they're making that sound like it's going to be a little too easy. It'll just be like no problem. It's not going to be easy. Okay, this is going to take many years, and I think you're going to run into state by state level issues with the NADA. So some Darwinian forces might have to come into play here as the retail auto distribution model gets recasted.
Did you guys catch that comment about Darwinian forces? Allow me to explain what I believe Adam Jonas was suggesting there. By the way, if you don't really understand what the is Darwinian, I'll explain. Darwinism is a theory of biological evolution developed by the English naturalist Charles Darwin, stating that all species of organisms arise and develop through the natural selection of small inherited variations that increase the individual's ability to compete, survive, and reproduce. What Adam Jonas is suggesting here is that a lot of companies are going to die in the process of transitioning to EVs because they lack the same ability to compete, survive, and reproduce that Tesla does. In other words, a bunch of legacy automotive manufacturers are going bankrupt. At least that's my interpretation of what Adam Jonas was saying.
It's a fascinating discussion, Adam. I also do want to ask you, though, about the Master Plan 3 and specifically about Tesla's battery business. The in-house battery is seen as a potential game changer in the EV industry at large. But of course, there's massive challenges in scaling that 4680 cell. Do you think that Musk ultimately pulls it off? And if he does, what does that mean for Tesla? Is that being priced into your target at the moment?
Well, if you don't mind, let me flip the question back to you. Can you think of any other tech firm or any firm in the world that has the capability and the scale to re-architect and industrialize a supply chain, which is currently broken? I mean, the current battery supply chain is not secure. It relies on materials that are not sustainable in parts of the world that are contested and not secure, to say the least. If it's not Elon, who else is going to do it?
This is a great question from Adam Jonas. Extremely bullish implications because we all know the answer is no one. If not Elon, no one. If not Tesla, no one. Hope you guys and girls have enjoyed the video. It's always entertaining to hear from both sides. Craig Irwin believes believing Tesla stock's worth $250 per share, but doesn't believe that enough to actually recommend people sell it or short the stock. Strong conviction, Craig. And Adam Jonas making some great points about Tesla's total dominance, their unassailable lead, and the fact that there's literally no one else out there that's able or willing or will do what Elon and Tesla are doing. And finally, don't forget to join Patreon with the card in the corner or the link in the pinned comment to gain instant access to over 100 exclusive Q&A videos. By the way, new Q&A video dropping in the next couple of days, so keep an eye out for that. Plus, you'll also gain instant access to my up-to-date Tesla stock price targets out over the next decade. So, I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.